The company we are investigating is the Warehouse Group to find out if it is a good investment. To help understand if the company is worth investing, we will look at its current market price, how that will affect our business decisions, as well as looking at market capitalization and the book value of total equity. The Warehouse Group is the largest retail group operating in New Zealand. It owns The Warehouse, Torpedo 7, Noel Leeming, One Day, The Market, and Warehouse Stationery. It is long-lasting and a stable company that has existed since 1982. The current listed price for the Warehouse Group is 2.24. Price is important when making a business decision, as if the share price is low, it reduces most risk of the investment. Price matters as it can help understand if there are any factors affecting the share price of the company and if it is something an investor can use to their advantage, such as COVID-19 has significantly affected companies as many have to temporarily close. The Warehouse Group was affected by this too, just by looking at their price. At the beginning of January, their market share was 2.85, but then on the 23rd of March, market price went down to 1.5. COVID-19 forced the warehouse to close its doors to the public as it was not classed as an essential service. This shows that the price of a company can tell us different factors that are affecting them and whether you should invest or not. This also means that it would be a good time to invest at a market price of 1.5 as the external factor of COVID-19 is gone. Then the company will start gaining more value as now the current listed market price is 2.24. This also means that the price is important as if the market price is too high, we may not be able to gain much value from the investment.
Value can be measured by a listed company's shares. However, there are several factors that impact the share prices. Because of this, the value measured using share price is market value, which is also known as market capitalization. Market value, or market capitalization, looks forward. It tells us what people are willing to pay today. There is also book value of equity, which looks back at the books, telling us how much a company would have in assets if it went out of business today. This can be measured by total equity. At 12:10 p.m. on Tuesday, 9th of June 2020, the market capitalization for the Warehouse on the New Zealand Stock Exchange was $780,397,000. Then looking at the Warehouse Investor Centre, I found the 2019 annual report showing total equity was equal to $482,033,000. To compare these, market to book ratio can be used. To do so, I divided the market capitalization of $780,397,000 by the book value of equity of $482,033,000 to get 1.62 to 2 decimal place more. This number tells us that the Warehouse are trading at 1.62 times more the book value. From an investor's point of view, 1.62 market to book ratio is quite high. It would be better to have a lower ratio, less than 1, as it is cheaper, meaning the share price is lower relative compared to the company's book value.
So, would you invest in your listed company? Why/why not? If you look at the price of a share the past month up to September 2019, the share seems to bottom out at 2.2 and peak at 2.8. The stock is not a huge revolutionary moneymaker, nor the next Tesla or SpaceX by any means. However, it is a low risk, low reward kind of stock. A great time to invest would have been at March 23rd, when it was at its lowest point of 1.5 a stock, which would bring the book/market ratio to 1.48, compared to its current ratio of 1.62. By no means is the company undervalued, nor are they bolstering their numbers. Strictly speaking, a book-to-market ratio of below 1 would be desired in order to invest. However, rarely ever is there a company that is trustworthy that has a ratio of less than 1. One that would be considered too high would be anything above 1.8 or 2. This just furthers the point that the Warehouse Group is a safe investment to make. We would conclude that right now would be a good time to buy stocks in the Warehouse Group and then sell the stocks again when it rises back up to 2.8 a stock. This stock will not fluctuate in price by a lot, which makes it a stable, safe investment. However, it's not a high reward investment either. I would say a large sum of money slash stock would be needed to purchase in order for this investment to be worth any merit.
Beep.